Welcome to the Second Bite Podcast, where we talk with top entrepreneurs and CEOs about creating valuable companies through creative transactions. Now, let's get started with the show.
Welcome back to the Second Bite Podcast. Today with me, Jeremy Weiss, founder and CEO of Rise 25. Jeremy's been a guest before, and we're certainly happy to have Jeremy on again. Jeremy, thanks for joining us today.
I'm excited. We're going to talk about, you posted something on LinkedIn and of the many amazing partnerships and, sales that were done this year and transactions. We're going to walk, so I was so curious. I'm like, you have to walk us through what happened with these, and we need some more context.
Excellent. I'm happy to provide it and I'm happy to jump right in. I want to say thanks first to our sponsor. Our sponsor is the good people at eCohen. eCohen's a great financial, really an accounting firm, and they help us on transactions. And they are now known as Markham because they were acquired last year. So shout out to our friends at what is now Markham for being a great sponsor. And, Jeremy, on the podcast, as you know, we get a wonderful opportunity to talk to founders and CEOs who have really aggressively grown their business through transactions, sometimes as an exit transaction, oftentimes as an evolutionary transaction for the business. I think it's the part that people love best about the podcast is that we talk to people that are relatively unknown, but have built a real and a successful business to the point that somebody else will pay them multiple millions of dollars for that business. And look forward to breaking that down a little bit with you with what we accomplished in the past year.
So before we get into that, what are some must listen to episodes? And by the way, I know you've been doing this for over 15 years, and you've perfected some of the strategies for M&A advising, exit planning to guide clients through. So this is what people call you for, to help them with this process. And when I was looking at PotomacBusinessCapital.com/podcast, all your podcasts are there, but I figured maybe what are some of the fan favorites?
Interesting, because I posted this on LinkedIn as well. The three most popular that we had. Grayson LaFriends, he's the founder and the CEO of Power Digital. They did a transaction years ago with Periscope Equity, and then Periscope did a transaction with the same Power Digital and sold to Court Square. We had Grayson on. That was a tremendous episode, two-part episode. You got to go listen to that. The guys at Court Square were also on, which really is interesting because then you get to see kind of both sides of a transaction. So that was one. Jared Spiegel is a serial entrepreneur, a term I don't really like that much, but Jared lives up to it. He thinks of himself in 7-year chunks. And that was fascinating. He talks about building a business over that period of time. He's exited a couple of times successfully. We sold a business to him a couple of years ago. And then Erin was on. It was such a great story from Control CV, Connect CV, excuse me. She's tremendous. She graduated University of Florida, took an entry-level job, and is now the CEO of Perform. She has done 3 transactions through private equity. So those are 3. It's interesting because when people tell me what their favorite is, it really depends on what's top of mind for them. And we've got accountants on there, we've got debt financiers, private equity guys, and just a bunch of CEOs and founders that talk about the good, bad, and ugly of their transactions.
Todd, throughout this, people sell for different reasons, right? And you mentioned the evolutionary sale. So I'd love to have you talk about, sometimes it just, the people aren't really looking to sell and people think of selling in a certain light. So talk about what you meant by evolutionary sale.
Yeah, it's interesting and a really good question, Jeremy, because a lot of times when we talk to people, they say, geez, I didn't realize you could do that. So many of the 4 transactions that we did this year, all of them, our client got a significant multi-million dollars in cash and equity and a small amount of earnout. And they now have a real partner shoulder to shoulder that's dedicated actual cash to buying into their company that wants to see it grow and have grown businesses before with a repeatable system that seems to work really well, and they have the capital to execute on that strategy. And when we present the opportunity for cash, expertise, and all the things that can go with that, it becomes a pretty compelling combination of reasons for people to consider a transaction.
And most people, when you're first talking to them, are thinking sale equals stop working.
A lot of times they do. Number one. A lot of times, number two, I also hear, I wouldn't be a good employee. I don't want to go work for somebody else. To which I always remind them, if I call you, if I'm one of your top 5 customers and I call you Wednesday at 4:45 p.m., you're missing your kid's basketball game, right? Because you're going to you work for me and you work for your employees and you work for everybody that makes your company run. So that's one thing I tell them. The other thing too is, really good buyers are not looking for employees, right? They're not going to say, Jeremy, I understand you've built a really successful business doing it this way over the last 10 years. We want you to do it completely different now. All they want is for you to continue to produce what you've been producing, just without all the nonsense like HR and finance and legal and all the other stuff that goes around, the wrappings of a real business.
This is called the Second Bite podcast, right? So we're talking about private equity companies. And I love to hear some of the differences before we dig into, because like when you look at the post and when people look at this post there, you'll still see a bunch of trophies. And we're going to walk through some of those scenarios, but what are some of the differences that you see between private equity companies?
It's interesting. Private equity fits into a pretty good bucket for the deals that we do, which is lower middle market. Our clients are somewhere between $1 million and $4 or $5 million of EBITDA. Those businesses, to make it worthwhile for an investor, have to grow, and they have to grow significantly. They don't need less people, they need more. They don't need to cut expenses, they need to grow revenue. So this is an exercise in making the business bigger. And so most of the, and we'll talk about 3 or 4 of them that we have worked with, most of them are interested in doing that. Then the question becomes, at what size will they participate with you? 5 to 6 million is a cutoff for a lot of them. I've got a couple of very successful, one of my most loved deals, 3 years ago, 2019, we did a transaction with a digital marketing firm out in Colorado Springs. They were $2 million of EBITDA, Jeremy, when we did this transaction. We sold them to a great group in Boston. 3 years later, at the end of 2022, including going through COVID, they'll finish this year at $17 million of EBITDA. My guys they started with 40% equity. They've been diluted down to 25% equity, but that business is probably worth $250 million. And they've been having more fun over the last 3 years than they've had at any point in their life in the past, professionally. So most of the private equity groups that we work with, they're business builders. They're not financial engineers. They know how to use debt. They know how to recruit and hire. They know how to do due diligence. They know how to source transactions. They know how to do all those things. The big difference is some groups want to be hands-on, right? We'll do a weekly call. We'll do quarterly board meetings. Some of them just want to do quarterly calls and let you continue to run the business. And so it really depends on what the entrepreneur thinks they need to maximize the value of the company.
In that scenario where it went from 2 million EBITDA to 17 million, obviously tremendous growth. Is that with the group acquiring other companies?
Great question. Yes. And when somebody hears that, they think, oh, they're doing a roll-up. And a roll-up connotes the fact that, for example, if you do SEO, we're going to go buy a bunch of SEO companies that do the same thing. And then that requires that you trim out the back office and you trim out this and you try to, get margin, multiple expansion because you're a bigger company. The real big successes in the digital marketing space, Power Digital, W Promote, Tenuity, Bounteous, companies like this, all of them have not done a roll-up, but they've done an arc of services. So they can provide a one-stop shop for their customers and integrate all of those required services to get an effective ROI for your advertising or marketing spend. And those are guys that are creating real value.
Yeah. No, I like that distinction, the arc of services versus a roll-up.
Mm-hmm.
With, the private equity companies, do you find that they have a certain amount that they want to invest to purchase companies, or do they want to purchase a certain number of companies in a given?
It's a really insightful question. Typically a little bit of both, right? So just to make it up, if it's a $200 million fund, remember they're going to borrow money as well. So they'll invest probably $400 to $500 million, right? In that range, depending on their philosophy. They obviously don't want to do that in 3 or 4 companies, but they obviously can't do it in 50 companies because then none of them make an impact and it's too much to manage and it's all like that. So from that perspective, they'll have a philosophy about the size that they want, the size of the fund. For example, the group that bought the company in Colorado Springs, they were I think an $80 million fund. So 2 million was a decent sized bite for them to get into that because they knew that they were going to do additional acquisitions as part of their growth strategy, and they would need more money for that.
Is there a certain consideration you have because you work with a lot of agencies that you're bringing them to different private equity, and that you want the fund to be within a certain range? Because I could see the advantages of, well, the fund is large. That means they're going to acquire a lot more companies, which means there's a little more EBITDA, but also means they're going to get diluted. So is there a sweet spot of the companies that you're working with, agencies are like, we kind of want the company to be investing X amount of dollars because we know we're going to be growing tremendously?
Yeah, I mean, that is, so when we start a process, we don't give consideration to that. We just want to find the people that are interested or not. So, for example, we have a really good business here in the Mid-Atlantic area. They're 3 million of EBITDA. We've got 5 groups coming in for management presentations over the next 2 weeks. That's down from about 10 that gave us an indication of interest. And those are some of the real granular things beyond economics, because the economics of those 10, the value and structure was pretty close. So now we're talking about the other things. How long do you want to hold it for? How much additional capital will you invest? How hands-on are you going to be? What are your past successes? On and on from that standpoint.
Yeah. And I know there's other episodes that you actually go deep in those topics, so people can check out the podcast for those. I want to dig in now from your post and the picture and get a little more details. And I don't know which one you'd like to start with, but when you look over the past year, there was an outsourced BDR company in digital marketing with first-party data, paid social, and sales training. Which one should we start with?
The sales training is a great one. It's a company in Dallas called CSS. Matt Sunshine is the CEO there. You can hear Matt's comments directly on the Second Bite podcast as well. So Matt has been in business with John for 15 years. John is 12 years older than Matt. And John wants to retire. So they worked out a deal literally where they're going to pay out John for 10 years. And so here's an example. So Matt and I met And I said, listen, so how about if we did something like this? And lo and behold, now Matt, if you think about it, has swapped out partners. So John's left, and this new group called Gemini Investors out of Boston. Gemini's on their fourth fund. Gemini has a tremendous track record. Not only are they really good people, they're very, very successful at what they do. They really like Matt's business for a whole bunch of different reasons. So Matt was able to go to John and say, listen, remember we have a 10-year note? I can give it to you all up front. John was thrilled. Matt now has a partner with a checkbook that can help him execute on providing an arc of services, right? Because they provide sales training for really great large companies that have a lot of salespeople to train. But those people also consume other things. They consume leads, they consume marketing, they consume SEO, they consume email, they do all those things. And Matt, in his top 10 customers, their average length of customer is 14 years. Their average length of customer, right? So if he were to go to them and say, hey, I didn't know if you realize it, but we provide content, or we do email, or we do HubSpot integrations. And so that is their path as they see it to kind of fame and fortune. So we had several people that really liked several firms that liked the business. Matt interviewed a bunch of them and just felt best about the people at Gemini. Jack is the partner there that we dealt with. He's terrific. And that transaction closed in April, May timeframe. And it's been off to a great start, and they're actively hunting down, tuck-in acquisitions.
So in this scenario, if someone's listening, agency owners specifically, if the partners have different goals, right? And it could be someone wants to retire, or maybe they just want to do something else. So I could see a scenario, because at least the people I talk with, they think, well, the obvious scenario is selling to that person. But like you said, you could actually swap out partners, and that swapping out partners is someone who actually wants to grow. And they, like you said, if there's a private equity, they've done this, it's not their first rodeo, and they really know how to grow.
Yeah, I've had many examples where the partners are the same age, Jeremy, but one's conservative, one's aggressive. One's got 3 kids and they're getting ready for college and they can't take the risk. The other one doesn't, and one is just, prone to more risk taking. And so it allows for the ability for these guys to swap one partner for the other if the other dynamics are right in the transaction. So, but particularly where there's an age difference, it's a tremendous solution.
So, outsourced BDR company, what happened with that?
Yeah, so outsourced BDR. So outsourced BDR are the guys, the men and women that are a BDR, business development rep. They do cold call, cold email, follow up on leads, all this kind of stuff. And then when they get a really good lead, they have to turn it over to a salesperson. And then the salesperson gets all the glory. So that business literally touches the salesperson. So what happened, and BDRs are used in SaaS sales, technology sales, software sales. That is the way that they operate their sales function. They need to keep that in-house because we need to have our BDRs here sitting right next to our salespeople. It's the only way it could possibly work. Then COVID happened and everybody was doing it remotely, and people realized, wow, maybe it does work like this. And most BDRs are fresh out of school. They're 22 to 25. They're out drinking Thursday, Friday, Saturday, Sunday nights, right? It's a difficult group to manage and to excite. So BDR now is really taken off. And what has happened in the BDR space is that people realize there's a ton of tailwind in that space. But again, the guys that we worked with, their objective is not to go buy more and roll up more BDR companies. What we want to do is try to, from the touching the salesperson, we want to develop and generate the good leads that the BDRs can work on, so we're handing off better leads. That means we need content. That means we need email. That means we need web integration. That means we need search. We need paid. We need all those things. And so that is their objective. My clients they sold, the private equity group is now slightly over 50% equity in the business. Our guys have an enormous upside. Plus they've got cash. Plus they've got a real partner that, again, has the experience of growing businesses in this industry and at that size.
Yeah, so basically they want to build out every piece of the funnel. So they provide that, like you said before, arc of services. And I don't know if you're allowed to say this or not, but I'll ask anyways. From private equity standpoint, what are they looking for? If an agency's listening and, again, I'm imagining there's these arc of services. If in that specific case, what are they looking for? What kind of companies?
So you see the board over my shoulder, my bigger board is here. And I've got, 30 or 40 there with what they're looking for. Platform company, somebody that's targeted in the nonprofit space, somebody that does SEO, another group that's looking for more HubSpot, somebody that does email marketing, somebody that does first party data. They're if you think about those slivers on the arc of services, depending on what they have and what they don't have is what then they're looking for. Then there's some groups that, for example, we've got one transaction we're working on now that they do digital marketing specifically to lawyers. We've got another group that does it specifically for dentists. And so there's some people that say, hey, we're going to focus on the verticals that we're delivering on. So if there's an agency that has a vertical focus, there's opportunity to participate in something that would be larger and perhaps more exciting.
Because I'm sure they'll get juices flowing for anyone listening, or maybe they know someone who has one of those. Actually, one of the people that you said come to mind. So I'll have to message you after we're done with that person's info.
Please do that. It's interesting because we get to talk to people. I'll give you a perfect example. This transaction here on the end, Worth e-commerce. Dean Dutrow is on the podcast as well, Worth e-commerce. You can listen to his comments. He's about $1 million-ish of EBITDA. He does email marketing for e-commerce customers. And he got introduced to me and said, I want to partner with private equity. And I said, Dean, you're just too small, man. You got to be at least a couple million, at least. But what we eventually did for him is that we found a great fit with SmartBug, who's a HubSpot partner. And they were the very first acquisition that SmartBug did. So while they didn't partner directly with private equity, SmartBug is owned by American Discovery Capital. Now, one other point on that, Jeremy. Dean has 55 clients when we did the transaction. SmartBug has 400 clients. And you know how many are doing email marketing with them? 0. So, as Dean said, if I get 20% of their customers over the next 3 years, I'll double the size of my business and I'll blow out the earnout. It'll be a huge home run. And SmartBug has 4 salespeople, 4 that will now be telling everybody about their new email marketing. So he got cash, he's got equity upside, he's got a sales team telling him, preaching the word. He is not doing HR anymore. He's not doing finance. He's not worried about accounts receivable. He's just focused on the stuff he's good at.
There was one that is digital marketing with first party data.
Yes. So really good. We close this on December 30th. Project Sprout is its name because it'll be announced, I think, at the end of this month. And I'll post it on LinkedIn as well. And hopefully Kevin will do an episode and he'll talk about this story as well. long story short, what they do, they have their own data platform, and they will help large D2C, direct-to-consumer brands, analyze their first-party data so that they can be more efficient at their media buy on social, on Google, on Facebook, on Insta, on all those things. So they get a better return on investment. That is the future of a lot of digital marketing for D2C brands. Our guys have great technology. Next year, it'll be good technology. The year after, everybody will be doing that. They don't want to be in the technology business. They want to be in the marketing services business. And they realized unless they really fuel that flame, that they're going to just pump all their money into that until it becomes commoditized. So they plugged into a much larger private equity backed strategic that has all those direct to consumer brands, that wanted somebody that would do data analytics, that wanted a team. My guys are 3, wanted a great team like that. And it was, I would say, a match made in heaven. It's been a week so far and everybody's still happy. But everybody was very excited about the transaction.
A whole week, all right.
Yeah, a whole week, and it went well. Week
the honeymoon period.
Yeah. So that was just a great fit. And that was a little bit of a one-off because I knew that group. I knew what they were looking for. I knew my client was trying to solve for this problem. And history is still to be written on that one, but that one I think will be a very big success.
There's a paid social next.
Yeah, paid social was just, they were out of California, Pivot CMO, Sean and Fred, 2 great young entrepreneurs, built a really good paid social and realized here's the way the world works. We do paid social. Everybody does paid social, but everyone that does it also does all this other stuff. So we're not going to build out all this other stuff. That's not what we're good at. We don't want to manage a big team. So we did a really good transaction with them, sold them to Conspiracy Theory. Great people to deal with.
That's a great name.
Yeah, really is. And Zayla, who is the managing partner there, was great to work with. She's putting together a hell of an organization there. And that will become something where, again, our guys got cash up front. They got a little bit of an earnout so that they could enhance their return, and they've got equity in the mothership. So they're fully vested and turn that into something pretty successful.
Todd, I want to thank you. It's always great to hear these. I want to point people to PotomacBusinessCapital.com and go to the podcast page, or just go to PotomacBusinessCapital.com/podcast and see more episodes that people should check out. And I'm looking forward to doing this again and seeing what happens in this year.
Yeah, Jeremy, I always enjoy the conversations. Thanks again to our friends Ed Markham for being a great sponsor. And if anybody that's listening wants to brainstorm, feel free, find me on LinkedIn, reach me through Potomac Business Capital, secondbitepodcast.com. You can find me there as well. And thanks, Jeremy. It was great talking with you.
Thanks for listening to the Second Bite Podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.